I'm Matt Bishar with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Ken Bernstein, the President and CEO of Acadia Realty Trust. Ken, thanks so much for joining us.
Thanks for having me.
I'd like to start by talking about your acquisition pipeline. Your company's closed on 5 deals so far this year, with more. You've already announced that there's more expected. How are you finding the market for assets right now, and what types of properties are you looking for?
There's no doubt that given that there's a fair amount of capital in the marketplace, it's a competitive marketplace. Thankfully, we have a niche and we have focused on it, and I think we're executing well, which is primarily focusing on dense, high street retail. So the majority of our assets have been in the Washington, D.C. to Boston corridor, as well as in downtown Chicago. And we're focusing on $20 to $100 million acquisitions of buildings where we're already active in the marketplace. So whether it's M Street in Georgetown, Greenwich Avenue in Connecticut, North Michigan Avenue in Chicago, while there's plenty of competition and we need to be disciplined, we can add 10, 20, 30% to our portfolio, we think, in the normal course of business, and we can do it accretively.
And what steps has the company taken regarding its balance sheet to fund these future acquisitions while also focusing on keeping leverage low?
So we have, for the 15 years that we have been public, been very focused on consistently maintaining a healthy balance sheet. Thus, we've been pretty clear that we will acquire our assets using match funding and on a leverage neutral basis, which means that we will go to the equity markets, whether it's through our ATM or through other means, to raise the appropriate roughly 2/3 equity, 1/3 debt. And we think that's a responsible way to continue to fuel growth rather than taking on additional leverage.
And lastly, could you talk a little about Acadia's fund platform and the concept of investing in next generation street retail markets?
So, along with building our core portfolio in high street retail, which I was talking about, and that enables our core or infinite life portfolio to continue to expand accretively, we also are the general partner in a series of funds, and we are then investing opportunistically in a wider variety of investments. One of those areas is what we call emerging or next generation retail. We've recently, for instance, acquired a portfolio in Savannah, Georgia on their Main Street, where it's clear that our retailers, the J. Crews of the world, the Urban Outfitters, are very interested, and in fact, we've already signed leases with J. Crew, for instance. So we spend a fair amount of time looking opportunistically where can we invest through our funds in new up-and-coming turnaround opportunities, because the way the funds are structured, the REIT as the general partner both co-invests its own capital, but then also gets very nice incentive payments when we can buy something, fix it, and profitably sell it. And that's the focus.
Ken, thank you so much for joining us.
Glad to be here.
For more on this and other REIT news and analysis, be sure to visit REIT.com.